Hey, welcome back to another episode of Fetta Facts. Today I'm going to share with you a special financial tool that's going to help you complete the trifecta, 3 of my favorite things: giving money away, investing, and getting my taxes lowered, all in one shot. I'm going to share that with you today. Hey, welcome back to another episode of Fetta Facts. Again, it's all facts, no fiction, no opinions. None of that stuff flies here because we're talking about financial training, financial education, right? Now, today, I want to share with you a financial tool that's going to help you do 3 of my favorite things at once, okay? I love investing money, okay? You guys know that, right? Investing gets me excited. Why? Because I like growing for the future. I like making sure my passive income is there. I like owning assets. That's fun for me, right? I also like lowering my taxes. Okay, lowering my taxes is beautiful. Anytime I don't have to pay money to the IRS, I can lessen the amount of money I've got to pay to the IRS. That's a win for me. Okay, third thing I love doing, and the thing I like doing more than any of the other 2, is helping. I love helping. I love helping people. I love making sure I leave the world a better place than I found it. And it really bothers me when I see that that's not the case and things aren't the way they should be, and this problem is happening and that problem is happening, right? That's why I do what I do. So the tool I'm going to share with you today is something that allows you to do all 3 of those things at once, right? It's called a donor advised fund, right? Now, here's the thing that this really is focused on. This is a very good move for your donations and your tax planning, okay? Because here's the issue we all run into, okay? Tax season comes around, and we aren't even thinking with planning season. We just wait till it's filing season, and then we're like, why is the bill so big? And then they're like, oh, you can just put money in your IRA, right? Because that's literally the only thing you can do at that point because it's too late. Now, if 6 months sooner, you would have been thinking with tax filing season is coming up when the year starts next year. I'm gonna have to file the taxes for the year that just ended. Before this year ends, I should do something to lower my tax bill. Next, I don't want to interrupt you too long. I just want to give you a free offer for my book, The Blueprint to Financial Freedom. If you go to jerryfetta.com/B2F promo, you can get the book now. I'm going to let you get back to the video. That's where this move starts, right? Now, most of the time, when you lower your tax bill, you're thinking, I want to lower my tax bill because when I pay taxes, that's money that gets locked up and I can't use it, right? So let's say you've got $100,000. You're going to pay 30% maybe, right? So you're thinking that's 30 grand that is locked up. It's gone away. I can't use it. So what's the bright idea or the alternative solution? Let me take the full 100. Let me lock it up so that I can't use it, so that I can avoid locking up 30 that I can't use, right? Either way, the money is locked up. You can't use it. When you put the money in an IRA, it's not usable anymore, right? Now you're thinking I can have it back in the future, sure, right? But that's why we're going to talk about the donor advised fund option today. Okay, because in most cases, if you just paid the taxes, you would have 70 you can use now rather than 100 that maybe you can use later. Because the truth is, in the IRA, we don't even know if the 100 is going to be there, right? It's in Wall Street. It's in the market. I don't necessarily trust that system. Okay, so what is a donor advised fund? Okay, I'm going to read to you the definition of a donor advised fund here. Donor advised fund is a private fund. So it's a private fund administered by a third party meaning not you, it's somebody else, it's somebody qualified to administer it, and created for the purpose of managing charitable donations on behalf of an organization, a family, or an individual. Okay, so it's a private fund. It's run by someone else that manages these things. It manages charitable contributions on your behalf. Okay, that's what it is. Okay, so let's break this down. I'm going to give you a couple of examples here so you understand this better. The donor advised fund works like this. We're going to whiteboard this guy. So typically when you make a donation, here's what it's going to look like, right? You've got you, and you've got money, and then you have a charity, right? We're going to call this a 501c3. That's the tax code for a charity. You give your money to the charity, right? That charity immediately gets use of the funds. You immediately get a tax deduction, and it's a done deal. It's a one-time thing. If you want to donate, you can donate. The charity gets the money. You get the tax deduction. That's it. Right? That's the way it's been for a very long time. However, as usual, turns out the wealthy do something different. They do it a different way, okay? Here's how they're doing it. With the donor advised funds, you still have the money, but instead, you put the money into the donor advised fund, right? Not into a charity, into the donor advised fund. The donor advised fund, because it's a qualified donor advised fund, you still get your charitable deduction, right? So you're still getting your tax deduction. But here's the difference. There's a difference between donating money and granting money. Donating money means I put it into a vehicle or a vessel that has a charitable purpose, and because of that charitable purpose, I get a tax deduction. Granting the money means I've dispersed the funds to be spent on a charitable activity through a qualified charitable organization. That is our 501c3. Okay, so that's a charity right here on the other end of this. Nobody ever said it has to go directly to the charity immediately. That's not a law. Okay, you actually can put it into the donor advised fund, get the charitable deduction, and invest the money in assets. You can do real estate, you could do precious metals, you could do private equity, right? You could do venture capitalism. There's a lot of different things you can do here inside of the donor advised fund, and you just have to have the intention that some point in the future that money is going to go to charity, right? Now, I want to stop you right here because you're thinking, so then I can put it in there? What's the catch? And then I can put it in there and then I can pull it back out again? No. So you can't. This is 100% for the benefit of charity. You cannot access this money ever again for your own benefit, but you can distribute it for the benefit of others, right? You can donate it into the fund and then later grant it to different charitable endeavors, different nonprofit institutions, different churches, right? So that's the benefit of this. Let's say you want to get a massive tax deduction and you know that you want to donate money to a charity. You put the money into the donor advised fund. Obviously, you need to work with your CPA. You need to figure out what are my limits for charitable deductions this year, and is there going to be an amount that I'm capped out at that might carry forward into next year? All of those are questions that you would ask your CPA, your tax professional. Okay, but for the purpose of this illustration, because I'm not a CPA and I'm not an attorney, I'm just sharing with you what I've learned from my donor advised fund people, right? Hey, you want to see a magic trick? Get a copy of my book, Blueprint to Financial Freedom. I know it's in front of my chest and my face because I want you focusing on the book and not me for a moment before you go back to focusing on me and the content. This deduction is yours whether the money went to the charity at the end or not. So here's what you can do. You can put money in, let's say, real estate. Let's say you put $100,000 into real estate. And let's actually draw this out too, just to really be clear about what this would look like. Right? So option A, you have $100,000 and you want to grant this to a charity. Right? Now, obviously, any charity is going to be happy with $100,000. Right? They're going to be like, man, that's awesome. Or you have $100,000, you're going to put it into the donor advised fund, which is going to invest in, let's say, real estate. Now, here's the thing. When it invests in real estate, that's not taxable. It's inside of a tax-sheltered vehicle that's got a charitable intention. The gains from that real estate get to go towards either back into reinvesting or towards the charity. So you can choose that the returns from your real estate go back into the donor advised fund and they build and they compound, or you can choose that the gains from the real estate go to the charities that you pick. Right? Let's say your real estate is earning 12%, which is $1,000 a month. And you decide, I want to take part of this and I want to reinvest it. I want to take part of this and I want to give it to charity. Right? And I'm going to start granting $500 a month, $600, $700, whatever it might be, towards charity. Right? That's still going to go to the same 501c3s that you pick. However, it's perpetual. Especially if you're reinvesting. I want you to think beyond just like immediate money. This is the problem so many people face. We think about the short term, like what do I get now? What's the benefit today? We don't think about delayed gratification. Delayed gratification is one of the greatest secrets in life. If you can wait for the effect to be big enough and the exact one you want, you're going to have amazing success. Right? So I want you to think about $1,000 a month being produced, you continue donating as well. Part of that money compounds, goes back into your investing inside the donor advised fund. Part of that money goes to the charities. And you have this gigantic asset that's growing and compounding and spitting off money perpetual money, like forever, continually. It's infinite. Paying these charities, taking care of the problems that you care about, right? Making the world a better place, right? How many charities do you think would want to sign up for that one? Okay, I can give you 100 grand today, or I can give you 12% of what I donate, the growth of it, every single month for the rest of my life and even after that. Right? Now, again, we've got to not think short term on this. This would only be for somebody who is wanting to lower their taxes and they're wanting to help, but wanting to help comes primary to lowering the taxes. As far as a planning strategy, because you're right, you could put money in oil and gas. You could put money in your retirement account. You could put money in, real estate and take accelerated depreciation, and you get to have all of it. This is for someone that's beyond the mindset of I've got to have it now. Okay, this is for someone that's thinking with really what my company is focused on, which is creating a growing membership or network of benevolent bankers. Not just bankers. We practice the banking concept using the sacred account. We don't need more bankers in the world. We need benevolent. What does benevolent mean? Generous, charitable, good, kind-hearted. You actually want to help. We have enough bankers in the world who don't do that. That are just, how can I make the most money on this mortgage at this person's expense? How can I loan the most interest on this car loan at this person's expense? How do I make the most money on this credit card at this person's expense? We don't need another one. Trust me, I don't want to help you do that. That's not my interest. But I want people who do things like they put money in their sacred account. They practice the banking concept and they say, man, I need to lower my taxes this year. So I'm going to take a loan against my sacred account. I'm going to put that in the donor advised fund. Going to get my tax deduction. I'll pay my loan back with the money I save on my taxes. And that money that I'm now banking against goes towards charities that matter, and it makes the world a better place. It buys assets that fund those things, right? That's what we're creating. It's a growing membership of benevolent bankers who increase their financial understanding, who increase their wealth, and obviously they have quality of life that's being improved for themselves, their loved ones, and the world around them. Guys, we inherit the tomorrow that we create or fail to create today. Our kids inherit the future that we leave behind. So if you're only thinking about the one line on your tax bill or the one little line on your net worth statement in the assets column, and you're not thinking about the future, how do I make this a better place for myself in the future, for my kids in the future, for my loved ones in the future, so that we're leaving behind a better world than we found? Because to this point, we've not been doing that. And I'm going to tie the bow on top with this, okay? I want you to envision a world where a pretty good size of the population does this. Let's say 5% even. 5% of the working population is donating money into causes like this. They're practicing the banking concept, right? I would think personally, taxes wouldn't be a thing. Right? Now, I know that's hard to believe, but think about this. The banking system, you put the money in the life insurance. What happens when it's in there? It's never taxed again. You literally took it off the table. It's no longer part of the tax system. It's out, right? You use the donor advised fund, you reduce your income tax doing that. You then take the money in the donor advised fund, you buy assets that make the world a better place to then invest in charities with the returns from those assets that make the world a better place, right? Let me remind you why taxes exist in the first place. Because the IRS can say, the government can say, hey, there's all these problems and things that aren't going well, and we need your money to cover it, and you're being a responsible citizen and doing your part and paying your share to end this crisis over in this other country, to end the drug problem, to end the homeless problem, to try and control what kids learn in school. What if we already all took care of it? Right? What if we used this donor advised fund concept to say, hey, Uncle Sam, sit down. Go home. Nobody invited you. Right? We took care of it. We the homeless thing, we fixed it. The roads, done. School, handled that too. Right? That war, that's on there. We're not going over there. Right? We've got our stuff handled here in our country because we as a community, as a populace, we took care of it. Sit down. Go home. Don't come back. You're not invited. See you later, Uncle Sam. What if we could do that? the demand for taxation would go down. Think about that. If there was no public works that needed to be funded, how could they justify taxes anymore other than we just want to? We need to pay ourselves more. That would be the only thing left. We need to pay ourselves, so we'd be like, cool, you're fired. Like we don't need this many people just being paid for this. Like let's strip it down to the basics and let's lower the taxes for everyone, and let's take the money and instead let's use it on things like this. That's the future I would like to see. Right? Call it far-fetched, but I think it's worth trying to get there. So if you're watching this, how do you know if this is a good fit for you? Number one, you have charitable purposes, charitable intentions. Number two, you are looking to lower your taxes. Number three, you are interested in investing outside of Wall Street, outside of the banking system, outside of the normal retail financial institutions. If that's you, reach out to me. Now, again, I'm not a CPA. I'm not an attorney. Not offering you any investments in this video, but this is education and training to let you know that this exists. And if you're interested in learning more about this, if you're a member of mine, reach out. I can set you up with a call with the people that we use. If you're not a member, you can grab my book. You can become a member. You can join our Facebook group. There's so many things you can do. You can reach out and even comment below and say, hey, how do I learn more about this? Right? But guys, that's it today for Fetta Facts. Thank you for watching. Like the video, comment below if you have any questions or thoughts. Hit the little bell notification to turn your notifications on for the next video that I post. Otherwise, I'll see you next time. Hey, this is Jerry Fetta here. I want to thank you for watching my video, watching my content. I hope you enjoyed it. If you would like to learn more about the blueprint to financial freedom and how you can achieve passive income that exceeds your savings, your expenses, your taxes, your generosity, and build wealth like the top 1%, I want to encourage you, grab a copy of my book, The Blueprint to Financial Freedom. You can go to jerryfetta.com/B2F promo, or you can click the link in the description of the video here. The copy is free. You cover your shipping. We'll send the book out to you, and we'll send you an email with a bunch of great bonus material also for free. Get the book, subscribe to the channel. I'll see you on my next content.